good evening, traders from across the globe, and welcome to the 1138th edition of Short-Term Trading Live with Oscar Carboni, and of course, that would be me. Good evening, traders. This video is being filmed on, what day is this? Tuesday? On Tuesday night for Trading Wednesday, February 19th, 2014. This is the 1138th installment of these videos, and I hope you tune in for the rest of this video, and I hope these videos help to teach you the art of technical analysis, which should in turn make you a better trader. Let's see how that pans out. As we know, futures trading can be extremely risky, can cause substantial financial loss, and is not suitable for all trading accounts. Volatility has been wild. Make sure you use your stops. All right, traders, so what is on this board? First of all, green OMNI in bonds, green OMNI in gold, green OMNI in the S&P and the NASDAQ. That, if you ask me, 32 years in this industry, does not make sense. But let's continue to talk about this. Something has to give, traders. Follow me along. When you see the chart segment, this is all that came to mind to me tonight and every night when I look at this for the last few nights, and it's this. One of these charts is not like the other. One of these charts just doesn't belong. Can you guess which market will peel away? Can you guess which one? Gold, bonds, and the S&P or the indices do not travel on the same track if the economy is on stable footing. Remember 2007. Gold out of nowhere starts this run up. Bonds out of nowhere starts this run up. S&P's finishing its last run up. And it has a big problem after that. 2007, remember it? Now, there was a big problem back then. We don't have that problem now. And back then, we didn't have the Fed holding this thing up to the tune of $65 billion a month. So it can't be that we're having so much trouble in the economy right now that gold and bonds will go up with the S&P. So again, one of these charts is not like the other. One of these things simply just doesn't belong. We will get into it. Look, right now, the gold market, for whatever reason, don't ask me why they're buying gold, but I'm a technical trader, so who cares the fundamental, but gold looks good above the 200 bar moving average right now on the daily. The bond market is supposed to be coming off. Thank you, tapering, right? The Fed has been tapering. The bonds are supposed to come off. They've been rallying with the gold. Then the stocks. The stocks look fantastic. You look at the stock charts, we're going to look at them. They look wonderful until you look at the indices, the broader-based indices like the trend and the Dow. And they don't look so wonderful. So what does it all mean? It's very confusing. Then there's this. You're going to love this. Well, if you read the papers this weekend, you'll get this. Traders, I read everything I can get my hands on over the weekend. I literally read through stacks and stacks of all the industry rags all weekend long, right? I had 2 days. I had an extra day to read this weekend with Monday being off. So I read like I don't normally read. I really read this weekend too, right? So, and it's good for me because when I read the papers, I never trade off of what I read. But a lot of times the charts I put on this board will create something. And when I read the papers, I'll go, well, lo and behold, right in the papers. I read this over the weekend. It came out right before that happened. It must have been that. You know, I use it for that. We don't trade off it. But there is this. I read the Wall Street Journal first, and I'll tell you what, when I was done with the Wall Street Journal, I was like, the world's going to come to an end, and Obama, he sucks, and that's it, there's no life, and that's it for the economy. I mean, it was like the doom and gloom newspaper, right? So I'm expecting everything to be that way. I get to Barron's. Did anybody read Barron's this weekend? Talk about what the future of the next few weeks is supposed to look like. When I was done reading Barron's, it was like there were rainbows flying around and all the mountains were made out of candy and the unicorns were floating around. I was like, how could there be such diversification between these two rags on the same weekend? Amazing. More confusion if you ask me. All I could say is, thank the gods of trading for our OMNI. At least we get to follow something that makes some kind of sense. Because this crap doesn't, I'll tell you that right now. But we will follow the OMNI. We'll follow it every day. It's calling for more buy signals in the NASDAQ and S&P on Wednesday. hey, we'll follow it. Traders, I got a couple of charts to show you. I think you're going to like what you're about to see. With no further ado, let's go look at some charts. Okay, traders, look at this wonderful picture. Dow Jones Industrial Average, right? Looking fantastic. Held the 200 bar moving average. Got above this crazy channel, right? When it finally got above it, tested it, had a whoa, big one. Then we had our breakdown, but it held the 200, and we're back above. Promising, wonderful, right? Dow Jones Industrial Average, one look anyway, at the daily. Then there's the S&P. Do you remember this whole scenario? I showed you that you've got a shoulder, a head, a right shoulder, possibly. None of these bars existed, right? All of this didn't exist. We were down here. So I put this in. And I said, I smell a rat. Well, a few days later, I did a video when we were up to about here. And I said, hey, very encouraging, right? S&P continues to look encouraging, so you gotta like the S&P chart. Look at this NASDAQ. Could there be anything better in the world, right? Blew right through that shoulder. On the onset, this stuff looks fantastic. Let's keep looking. Then we look at the weekly Russell. Look at this wonderful long-term channel we've been in. We only dipped under it during that 2-week blunder that we had. We came right back up recently, back in the channel. What else could you say, right? Indices to the moon. It's not going to be one of the indices that peel away. But traders, it's not that simple. It's not that simple. We are not out of the woods. The video I showed you 10 days ago or somewhere around there still persists. It's still running right now. The video has not been satisfied because look at this. Okay, so the futures markets that tend to run away a little bit went through that right shoulder, talking about the NASDAQ and the S&P. The big, broad-based markets like the Dow Jones Industrial Average, it has not. It has stopped here for a couple of days now and is hanging around like it did here. It may actually just start to fill in the shoulder. Now, I'm not a bear, and I'm not expecting that. I'm expecting this. But there is a scenario that could absolutely take place, and this is that scenario. This is your Dow Jones Transportation Average. This is not nearly as impressive as the futures markets. This is a viable possibility if the broad markets like the Dow and the Tranny do not catch up with the futures market. This could be what we spend the next few weeks doing before then a tailspin. Now, again, this is not my projection. I am not telling you this is coming, but I am not going to take my eyes off of this until it negates it for me and we get up here. If we do not, I think this will fill in. So, bullish, green Omni, we know that. We are not calling the downside at all for trading tomorrow on Wednesday, but keep this possibility for the future in mind if, in fact, the gold continues to rally, the bonds continue to rally, and this thing doesn't get above the right shoulder as well as the Dow Jones Industrial Average. Then there's this, traders. 30-year bonds going up undoubtedly, right? What is that about? Gold undoubtedly going up. What is that about? The E-mini S&P and the indices going up too, and the S&P going up too. Let me say that again. All three of those are going up at the same time. One of these will have to make a U-turn. Traders, I've been doing this for a long time. It can't stay this way. Get ready for something to change. Thank goodness for the Omni. It'll tell us day by day. The gold right now, unless for whatever reason it doesn't like to stay here and makes a U-turn, we are above the 200 bar moving average. We are above this pretty long channel that we've had here in red. We broke out of this major downward channel. So being above the 200, and now if you look at the settlement from earlier today, you're above the channel up here. That looks pretty good. So gold looks like it should rally. The indices look like they should rally. Bonds are supposed to taper off because of the tapering. Let's see what we get, traders. We will take this one day at a time, but keep your eyes posted on what I just showed you. Traders, there it is. You've seen my technical argument. There's a lot of confusion out there, but Omni's pointing straight up. We're going to trade the indices. We're going to trade the gold. We're not going to go near the bonds. And we'll see what happens. So, one day at a time, follow the Omni. If you don't have your own methods, come to livewithoscar.com. I give out specific trading recommendations right there. I give them out all day. I send signals all day and night to wear the trades. If you don't know how to handle this craziness, come huddle with me in my chat room at livewithoscar.com, and I'll see if I can get you through this madness. Traders, that's about it. Hey, OMNI campus, are you psyched? Here we go. Rock and roll, baby. OMNI camp. I will see you guys in just a couple of days. I'm excited. I love when I meet my OMNIX face-to-face. Get in on time Thursday and get some sleep, because the next 4 days I'm going to work you to death. It's not easy to learn this trade, so make sure you rest it up. OMNI campus, can't wait to see you. All right, traders, I'll see you all at livewithoscar.com. Remember, keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, especially during this volatility. And you know what that is. Stops are in. Please remember that. Emotions are out. Rock and roll, traders. I'll see you at livewithoscar.com. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.